So last week, a relatively unknown AI company out in China called DeepSeek released a new AI model called R1, and it has absolutely turned the AI industry and world upside down. It's probably the biggest news I've seen in AI in a few years, which is a complete eternity in terms of AI, timelines. And even if you're not into AI, you need to understand what's going on over here because of the high concentration and beta that AI plays in the overall markets and market structure. So did the AI bubble pop with the release of DeepSeek R1? That's what we're going to talk about and find out in this episode. So let's take a look at what's happening here. Everybody is freaking out about DeepSeek. And that's a good way to put it because, especially if you're a competitor, because of what DeepSeek represents. If you look at this message post to Blind, and if you don't know what Blind is, it's basically an anonymous, it's like kind of 4chan for gossipers at work. But basically, Meta, which is involved in AI and it's building its own AI team, if has kind of like, it's kind of in a state of frenzy, right, or panic mode, as it says here. They're saying that basically they're not sure if what they're going to do with their team because, an unknown Chinese company, $5.5 million training budget, has basically put them to sleep, right? Like, $5.5 million training budget is a five. I don't know if you know how small. I mean, it's millions of dollars, but in the world of AI foundational model training, $5.5 million is a drop in a bucket. That's like almost nothing, right? That's like a rounding error in terms of like the amount of money that people are shoving into generating these foundational models. And so, words like scary and frantic. I mean, that's basically what's going on out in Silicon Valley right now. The Chinese have come out with this AI model, and basically Silicon Valley is just in complete panic mode. And one of the things that they're panicking about is actually the human aspect of it, the human resources, all the money that these companies are putting into building AI teams, right? And so, yeah, when you have like, people building huge AI teams, they can't justify the huge cost to do it anymore. And leadership they have no choice, right? They have to take a look at what's going on and see whether or not they should continue with the investment. Now, what is what is the big deal about, this DeepSeek R1? One of the major things stemming from the innovative approach that it has is that they've been able to achieve they're able to match or surpass the best of the West, right? We're talking like OpenAI, and we're talking about all the other competitors out there in the West. They were able to match or beat the benchmark set by those companies at a much lower cost. And I'm not talking like 5%, 10%, 20% lower cost, or even 50% lower cost. They were able to do it at 98% lower cost. 98%. That is truly amazing if you think about it, that they were able to, using an innovative way to develop the AI model, achieve a similar or better output at 98% less cost. That is going to make a huge difference, not only in the industry, but to the world. And the crazy thing about this, so OpenAI's O1 at 98% less cost. And I mean, if you look at the breakdown of this, you'll see that they're able to achieve it at 14 cents, right? Their reasoner at 14 cents per million. That's the way they kind of measure it, per million tokens, right? That's kind of how they measure the standard industry way of measuring costs to generate the AI models. And I think it costs like over $7.50 for OpenAI to develop its O1. We're talking less than 15 cents, right? It's not even $1. And that's pretty crazy when you think about it. Now, it is also no coincidence that this occurred right after, or soon after, basically, right? So Trump comes out after his inauguration. So the timing of all of this is also really interesting. So it's centered around Trump's inauguration, right? And around that event, the Chinese have come out with multiple, I guess, hits, right? And one of them is this AI hit, which, as you know, United States has been sanctioning and preventing the highest end GPUs, or the chips used for AI processing, to China, right? And so boom, Trump has his inauguration, and what comes out? This crazy new model that was built after they put this chip embargo on to China, right? As a kind of like, FU to the US and to the Biden administration. And so what does Trump do soon after? Well, he announces a $500 billion. And so who do we have here? We have the character string of Sam from OpenAI, Masayoshi from SoftBank with the committed capital, which Elon Musk has kind of trying to debunk because I guess he's in the space. And you got Larry Ellison, the guy from Oracle. And basically, Trump's trying to get the best of the West together to outgun the Chinese, essentially, and win the AI battle or war. And it's funny here because if you think about it, money alone isn't going to win the AI race, as the Chinese have shown. But yet here we are doubling down on the money, hoping that helicopter moneying is the way to beat everybody else. So this project was called Stargate. I guess it's going to open a portal into another alternate reality through AI. But it is basically the US's comeback answer, because it was announced soon after the unveiling of DeepSeek R1 by the Chinese. Now, why does this all matter to investors and people in the stock market? Well, if you look here, right, we are at an all-time high. I think we actually have surpassed the Great Depression and, the 1928 bubble in terms of market concentration. So basically, we're getting the top 10 stocks, right? And what is the largest stock relative to 70th percentile of the stock market cap, right? Market cap-wise. And if you look at this, we are over 30%, which is crazy, right? And so we have surpassed the dot-com bubble that was in the year 2000, when everything was concentrated into like Cisco and Akamai and all the back then versions of today's NVIDIA, and so on and so forth. Now, so this tells you that the concentration, everybody's on one side of the boat, right? And we are in one side of the boat, the most it has ever been in I guess in recorded history. So that tells you one thing, right? The other thing that you look at then is, where is the concentration? And the concentration is in Magnificent Seven. In fact, it remains as of, when was this? So it includes January 2025, this month. It is still the most crowded trade, right? Followed by long dollar, long crypto. Long crypto is actually, like, if you look at this, less than a third. That's how concentrated the and who's in the Magnificent Seven, right? Led by NVIDIA. It's interesting that I don't see gold here. I don't know if that was part of the survey, but which is actually a good sign if you're long gold. But back to the point at hand here. So we're super concentrated into a few stocks, and those few stocks that we're super concentrated on are the Mag 7, and that Mag 7 is, as you know, all the tech companies like NVIDIA, so on and so forth, right? Fueled by the AI hype. So what does that all mean, right? Well, that means, look, if you have a company that has come out and essentially lowered, right, the cost by not just a few percentage points or even an order of magnitude, it has done so in orders of magnitude, right, at 98%, crazy amounts. That means that the thing has been commoditized, right? The industry has now matured to the point where the thing of the industry has now been commoditized. The code has been cracked. People, the moat, if you will, the protection. This is what they always ask: what's your moat and what's your barrier to entry? Well, that has been kind of cracked open. And here's the thing: they did it, not only did they do it at such a low cost, but what they did was they did something crazy, which is it's open sourced. And actually, and if you know what open source means, it's kind of free, right? Like you can just download and run it. Look, I've downloaded this thing and run it on my MacBook Pro laptop. And it can run on my laptop, no problem. On my MacBook laptop, it can run easily this model. And the performance is better than OpenAI in some cases, right? I mean, we're talking about billions of parameter models running on a laptop with like, it's on Apple Silicon. It's not even an NVIDIA GPU, right? MacBooks are running on Apple M1 to M3 chips. Nothing to do with NVIDIA. And the performance is great, along with the memory consumption, right? So why I could just download this free, right, open source model, run it locally on my laptop, right? So I can like shut off the internet and run it and query it, and I can get the productivity gains potentially from it, right? Now, why would I pay for API access or, website access for the other competitors? Like you wouldn't, right? Like why would you? The answer is you wouldn't. And so what has happened now is this thing has been commoditized, right? And so, there's one example. So here's what's the wrong way to think about it. Here's the wrong way to think about it. And I've read this in X posts and all around the blogosphere. Some people are saying, look, this is going to be, the bubble popping, because now imagine it's like the iPhone, right? And imagine, the iPhone costs like, $800. And now, and picture this was like 10 years ago when the iPhone was still new. And, the $800 iPhone had come out, and all of a sudden the Chinese comes out with basically a better iPhone, but now it's only $30, right? You're done. You're done. That's the logic people are saying. And I mean, I get that logic, but it's actually flawed. And the reason is, in the model of an iPhone, there's actually a limit, right? What if everybody ends up buying the iPhone? That's it, right? You're not going to buy 2, 3, 4, 5 iPhones. You're just going to really just have one iPhone, right? So there's a ceiling to the amount of iPhones that you're going to sell, basically. And that's not the case with AI, right? There's no ceiling in terms of how much AI you want. You need, you're just gonna, it got cheaper, so I'm just gonna run more of it to outgun my competitor. So there's no ceiling, there's no like limit to the amount of AI crunch, analysis you're gonna do. If it got cheaper, then you're just gonna do more of it, right, to outgun everybody else and have better AI intelligence. So for that reason, I don't buy that analogy like of the iPhone and that's why it's gonna pop. No, the reason I think that there's gonna be basically, a bubble popping, yes, is because now there needs to be a diffusion of the technology because the moat is gone, right? So it's not that everybody's going to buy an iPhone, and no, it's not that. It's everyone's going to continue doing it, and they're going to require more and more. They're still going to funnel the money into it to outdo everybody else, but that money is not going to go into anymore this Magnificent Seven or just NVIDIA and all that. Why? Because now you don't need that. You don't, the breakthrough that the Chinese have made is you don't need hyperscale distributed environments to do the compute anymore, right? And so you don't, the moat is gone from these few companies that held it with a grip by having this GPU and architecture and scalability, that the old way of doing AI, and I call it now the old way because this new way is clearly much better, right? And we'll talk a little bit about what the new way is. You don't need all that hardware, right? And the Chinese have shown that you don't, right? And so that means that there needs to be a diffusion and a distribution. So money is going to continue to come in, yes, because people are going to want AI and do it, but it's not going to just go in and concentrate into these few companies anymore. It's going to go into a distribution and diffusion mode into many other types of companies, some that will spring up now. And for that reason, there's going to be a breakage of this concentration. And you know what happens when there is such breakage? It tends to lead to bubbles popping. So let's talk a little bit about what the exact, innovation is. And this is actually an article I was reading that actually reference their own white paper, DeepSeek's own white paper, and this is the crazy part, right? So the old way of doing it didn't rely so much on reinforced learning. And reinforced learning is basically, if you do something well, you reward or incentivize the model, and if it doesn't do something well or the correct way, you don't incentivize it, right? Basically. And so this new model, this new way basically of training is a way where they actually overemphasize or emphasize a lot and focus on reinforcement learning. And in this DeepSeek's R1 paper, they basically talk about how the model itself, right? The model itself was given a problem, and it was stepping through the logic on how to solve the problem. And the model here in red, and the crazy part is that's actually the computer's own words. It wasn't, this is not a human, okay? This is not a human generating this, right? This is the computer itself saying, wait, that's an aha moment I can flag here. And this right here, right here was when DeepSeek's researchers said that to them also was an aha moment. It was when the computer had its own aha moment. And it started to reevaluate the way it was learning. But the point here is, because of reinforcement learning, to put it into a layman's terms, because of this new way of training, the machine, the computer, actually found its own way on how to be creative in thinking about how to solve a problem, right? It was like the Midas, the moment, right? Like kind of like the Eureka moment when dude went into the bathtub and the water rose and overflowed, and that's how he, ran out saying Eureka. I mean, this is basically in the computer world's history books, that moment, right? It's the first time a computer program, a synthetic intelligence, has actually become aware that it had its own, aha or Eureka moment, right? That's pretty crazy if you think about it. And so this is basically the reason, or the beginning of the end, essentially, of the old way of doing things. And, it ushers in a new way of doing AI model training. Now, the crazy thing here is, what generated this was actually the United States, right? So as you know, the US has these embargoes and sanctions against the Chinese and a few other countries, right? They don't allow companies to export the highest end chips. And they thought by doing so, they're going to tamper down and slow down the Chinese and the Chinese development of AI, right? And here's the crazy thing is, it was the exact opposite happened. And this is actually a lesson in entrepreneurship that anybody who's watching this, you think about becoming an entrepreneur, this is one of the lessons you must learn, is that scarcity, right? And lack of resources, lack of money, lack of capacity, these things compress, right? They're obstacles. They compress and they put pressure on you to deliver. And that pressure, just like a combustion engine, like, in the old days you needed a carburetor to start the engine of a car, like it compresses, right, the gas so that when the air and the gas and they put the spark, it explodes, and then the combustion cycle happens and your engine runs, right? Without the compressor, the compression, you're not going to start the engine of the car. Well, it's a similar thing in entrepreneurship, right? If you put these restrictions, you compress, and that's where the innovation pops out, right? It's because of the duress and the compression and the lack of resources, and you're forced to come up with another way to do something, right? Because you have no choice but to do it, because you've been handed down these limitations. That's where the innovation comes from. And I can't tell you how many times companies and government entities get this wrong. They think they're just going to throw money at something and you're going to get innovation magic. You can't buy innovation, right? What innovation comes from duress, stress, limitations and constrictions. That's where the innovation comes, because you are forced then to think and do things in a novel and different way, right? Not just do it the same old way, but like just pour money and brute force strength your old way out. No, you're forced to come up with a new and different way, right? At all costs. And that's basically what the Chinese did. So the US basically shot themselves in the face, right? They're like, oh, we're going to constrict it. And what that do? That actually just fueled the Chinese to become more innovative. And here is the result, right? We've got a step change in the AI world now. It's not going to be the same anymore. This is, if we look back in AI history, this is going to be one of those junctures. It's going to be like before and after DeepSeek and after DeepSeek. That's how big a difference this is. What this means is that the AI industry has changed, basically, right? Whether people realize it or not, it has changed, and soon more and more people will realize and understand the fact that things are going to be completely different now going forward. It also means the diffusion and distribution of capital into the industry, which means a concentration into some of the companies in the Mag 7 is going to go away eventually. It has to, right? And so like, the dot-com Cisco days, a similar thing happened. There's going to be all these startups that accumulated Cisco routers, or startups using the Cisco routers. All this had to go into secondary markets, and it pushed the price down as they were dumping the routers onto the market, and so on and so forth. Well, something similar will probably happen here with GPUs, right? There's going to be a lot of startups who have bought and are selling in their data centers GPU access to people, and or using GPUs, and these startups are going to get, they got a lot of venture capital money, and now they're going to have to figure out a way to offload some of this, because they're even though the demand is still, like I said, going to be there, the cost of using NVIDIA and those types, or AMD's chips, may not be as great, because there are going to be alternatives now, because now you don't need hyperscale capability to develop the model. And so there's going to be a lot of chips offloaded to the secondary markets as well, going to depress price, and basically it's a self-reinforcing cycle. Anyway, that means there's going to be a distribution diffusion, and if you want to call it a popping of the AI bubble, I do think it is. Not for the reasons that some people believe, but for the reasons I described earlier, right? It's because of the diffusion cost of the compute for AI. And so, yeah, you just got to be wary of that. Now, is it going to pop tomorrow? Or are we going to have a crash tomorrow? No, that's not going to be. We will have a crash, I do think, and we'll get into the stocks are trading now. There will be a bear market, 20% plus, to start it off on the downturn sometime in Q1. But it doesn't mean like the AI bubble is going to pop on Monday morning. No, that's not what I'm saying. But there will definitely be a deflation of it, with some crashes along the way for sure in this year and next year and perhaps a year afterwards. So for next week, so if you look at my last video, I was saying like, look, there's a reversal, market's going to go up and we might maybe hit all-time highs, and guess what? The market went up. We hit all-time highs, or yeah, I think we did in the S&P. And I believe now for the next week, we're going to have a correction, right? I still think we're in an up I don't think the blow off top is over. I think we're still going to go higher. But I do think this coming week, we're going to have a correction. And we'll see how deep the correction is. And I plan to make money on this correction in the coming week. And, let's see why, right? So one of the things I'm looking at is the yield on the treasuries and the bond market. And, if we look at this, right, what's going on here now is we are essentially coming down and hitting possibly a double bottom over here, right, if you look at it. And this is TLT, which is the bond market. Now, if we zoom in into the weekly here, right, and we take a look at what's going on, we'll see that we had been going down quite a bit, and we had a rebound, right? And I said we would have a rebound. We would have a counter trend rally, and we did, right? And the question is that over? And I think so, all right? I think we may have a little bit more to go, but we're going to go back down, which means the stock market is going to be pressured again. The other thing I was also looking at was the dollar, right? So if we go into DXY and see what's up here, I told you that we, had broken out of basically a trading range for that has been going on for multiple years, right? A 2-year plus trading range, and we broke out of it. And I told you, after the breakout, we're going to come back down and retest, right, the previous high, and now find out whether or not the previous high is support. And we're just about to head there. So like the dollar has come down quite a bit in the past 2 weeks. And some people are like, oh my God, the dollar is crashing, right? Like, oh, yeah, it's going down. It's expected. I told you what's going to happen. The question is, from here, what's going to happen? Is it going to go back up, or is it going to continue? Will this hold as support? Notice that we're also at the moving average, so there's a convergence here, right? It will find support in the moving average and also in the previous resistance zone. So I anticipate now for the dollar to have a rebound next week, which would again pressure the markets and have the markets go down. So basically, for next week, I'm positioned that short, and I expect the markets to correct and go down, after which I think it'll still make another attempt to go up again and create a new all-time high, a fresh new all-time high. And this will continue on, but the time is limited. I would say maybe a month, maybe 2 months more of this kind of uptrend before the bear market starts. And we'll know the bear market starts because when the bear market starts, the first leg down will probably be somewhere around 20%, which is a significant fall, right? And it needs to drop by that much to kick off the bear market. And that probably will happen in a month to a couple of months from now. And when that happens, you better be prepared, because what's going to come with the bear market is a recession. And I know nobody's talking about a recession, and Jay Powell came out the last Fed speech. He said that he had averted a recession, right? I think they're all wrong. That's what mainstream media and the herd believes in. I don't believe in it. I think we will get a recession. Maybe next episode I'll talk about why I believe so and all the indicators, especially the leading indicators pointing to it, along with everything else, and how you need to prepare, because if you don't, you may end up in a world of pain. So, having said that, good luck, everybody. Let's see what the Fed's decision this coming week. We're going into the Fed decision going up, so that kind of means chances are it's going to go down with the Fed's decision in the middle of the week, and we'll probably have this, interim correction in the still uptrend cycle that I think will push us still to those new all-time highs before the bear market begins in earnest. So I'll see you next week. Peace.